and we're ready to go.
All right. Well, hello, everyone. I'm Valerie Fox. I'm the founder of Consistent FX Profits. Today, I'm going to be sharing some information with you about the perfect recipe for a winning trade plan. So I know the audience here is, I'm a Forex trader. This presentation is actually very applicable to any type of trading. So I may be giving a lot of Forex specific examples as I go through the presentation, but you should be able to definitely translate that into any instrument that you trade. So let's begin. As always, like most of the other presentations here, we've got to go through the disclaimers. Make sure you know this is educational purposes. It's not investment advice. There's definitely large trading, and you need to be aware of those risks, and ultimately only invest risk capital. And then, I'm going to be sharing some testimonials. They are real testimonials, but obviously everyone's results are different. So just be sure to keep that in mind. Okay, so here's what you can expect in this presentation. We're going to cover why it's important to use a trade plan, first and foremost. Then I'm going to go into why it's important to use a written down trade plan. And those may seem like two very similar things, but they're actually quite different. And many people believe they're using a trade plan, but then they don't actually have it written down. So I'll go into more details on that. And then last but not least, I'll talk about what you should actually be including in that trade plan. So also, if you stick around to the end of this presentation, I do have a free bonus for you, something that you have to pay nothing for. So stick around to the end to make sure you get that. And you might even get a, I like to over-deliver here. So the cold truth about trading, I don't say this to be all dark and gloomy, but most of you are here because you have an interest in learning how to grow your income one way or another. And you're trying to make money and you haven't maybe figured that out yet, or you're not making the level of income that you're hoping to make. So you're here trying to learn, and the truth is people aren't successful right out of the gate all the time. There are people that struggle to make money trading, no matter what instrument you're using. And that's why there's so many amazing coaches and trainers out there to help traders, because it's not automatic that just because you start trading, you're going to make money. People lose money, people make mistakes, people learn things the hard way. So, there are some, cold truths with trading, that it's not easy or else everyone would do it. But it's also not hard. And there's a lot of things that are actually possible trading. So you can find an edge. No matter what market you're trading, it is possible to find an edge. You can execute consistently. So no matter what the market does, the thing that you have control over is executing consistently. And because of that, you can profit consistently. So assuming you use a proven trading approach that has performed well over time, as long as you're executing consistently, then you have the opportunity to also profit consistently. And when I say profit consistently, I don't mean you're necessarily winning 100% of the time, but I just mean over time, your results are consistent enough to generate profits. And you can do all of this without breaking the bank, without spending years figuring it out, and without spending all day in front of your charts. So my goal for this webinar is to help two kinds of people: beginners who don't feel comfortable to actually start trading, and experienced traders who maybe haven't found the path to consistent profits, but are in this position like not ready to quit. So both people this information is going to be good for. And again, it's really specific to Forex. It's applicable to any instrument that you might be trading. So why should you listen to me? Who am I? I'm new to this webinar series. Tell me more is what I'm hearing, or what I would be saying if I was one of the listeners. So I've been trading Forex for over 9 years. With my trading approach, I win over 70% of my trades. So when I talk about consistent profits, that's what I mean. I'm definitely winning more, and in my approach, am able to get really take advantage of that compounded growth over time. And I will go into detail on that in a little bit later. I'm less than an hour a day at my charts. I'm super conservative. I only risk 1% of my account balance per trade. So I'm not one of those get rich quick people. I'm like, steady Eddie wins the race. I'm going to teach you how to grow and accumulate your money over time. And I make over 6 average return of the S&P 500. So say is I'm experienced specifically, but again, what I'm about to tell you today is really going to help you no matter what you trade or no matter what you desire to trade. So again, we're going to cover what's a trade plan, why use a written down trade plan, and what should be included in your trade plan. So let's dive into that right now. So number one, why is it important to use a trade plan anyways? So maybe we should start with what is a trade plan? So a lot of people talk about having a plan, having a set of rules. That sounds really general to me. And, you know, I think if you went and asked 10 different people, what is a trade plan, you'd probably get 10 different answers. So what I mean specifically regarding a trade plan is, what are your rules for qualifying trade setups? How do you even know what you're looking at? Where are you entering? Where are you exiting? How are you managing the trade? What's your risk mitigation protocol? Like, what are some times you trade? When do you not trade? Like, do you have all of this lined out? So a trade plan is basically kind of your guiding detailed rule book for how you're executing every day. And it's important to know that, because if you're not executing consistently each day, then you're not going to get consistent results. So like I alluded to, you're never going to win 100% of your trades. That's just, no one can predict the market, but you can put the odds in your favor. You can identify high probability trade setups. And when you do that, and when you execute on it flawlessly, of the opportunity for consistent results. So it's important to use a trade plan, because that's how you're going to be very objective in your rules that you follow, in the way that you trade every day, in building in that consistent execution so you get your consistent results. Number two, why is it important to use a written down trade plan? So I bet if I were to ask everyone on the line here, and you know, hundreds or thousands of traders even, do you have a written down trade plan? Well, actually, let me take this back. I would first ask, do you use a trade plan? I'd probably say over half the people would say yes. And then I would ask next, do you have a written down trade plan that you use? And I bet 99% of traders would say no, which means they have a trade plan in their head, which is an idea and probably relatively specific, but it's probably not entirely thorough. And furthermore, that means they're probably making some emotional decisions in the moment when they're trading. Like if you as a trader haven't taken the time to actually write down the rules that you're following each day, with each trade, etc., like you're probably not executing consistently, because you haven't taken the time to be incredibly thorough in documenting your process and your process steps with trading. So I take a very mechanical and systematic approach to trading. I'm a technical trader, so I'm able to do that. But it's really important to have these details written down. So just for, you know, shits and giggles, I'd love to hear you guys type in the comment box, type yes if you have a written down trade plan, and type no if you either don't have a trade plan at all, or maybe you have a trade plan and you're not actually, you don't have one written down. So yes if you have a trade plan written down, no if you either don't have a trade plan or don't have a trade plan that's written down. So I'm going to give you just a minute here. I see a yes, and then I see a no, a no. Anyone else want to share? Thank you guys for being vulnerable and putting your reality there. I mean, I think what you'll find as more people respond to this is there are quite a few people that actually don't have a written down trade plan. And again, you know, the reason that's so important is because you're probably not executing consistently, and you're never going to get consistent results if you don't have consistent execution. And I'm probably going to sound like a broken record as I continue, but that's, if you take nothing else away from this presentation, that's what I want you to take away. So number 3, oops, what should be included in your trade plan? So what I'm going to go into detail now about is all the very specific components that should be included in your trade plan, your written down trade plan. And I call this the perfect recipe for a winning trade plan. So what's included? Number 1, logistics. I'm going to go into detail about all of these, so I'm just going to list them off here real quick. So logistics section, a qualifications section, a trade management section, and a visuals section. So I have an actual trade plan that I use daily and that I share with all my clients that when I teach my Forex methodology to them in my coaching program. And this trade plan, it's gonna, as I go through the details, it's very, very specific, but know that it's not that complicated either. I have my trade plan on a single Word document. So your trade plan can be on a single Word document. It can be in Excel. I do have a secondary version of Excel myself. I'm totally an Excel person. And then, you know, it could be on a scratch piece of paper that you literally write down with a pen or a pencil. So don't get held up on like the professionalism that this needs to be. It just needs to be written down. Or it could be on your phone, like you could text it to yourself, email it to your, whatever. So feel free to take notes as we go through this, because this is, again, something that you could do today. You know, if you're currently trading something, I challenge you to write down your trade plan and go through this exercise so that you can actually have your trade plan written down. And if you don't have a trade plan or you're not actively trading, obviously you're here because you're interested in trading. So I challenge you that whenever you do find that proven trade plan, whether it's something that you develop or something that you purchase from someone else, if it doesn't come with a written down trade plan, I really do challenge you to take the time to write it out. So let's go through each of these sections now. Logistics. So what do I mean by logistics? Logistics outlines the overarching trading strategy that you're using. So let's start by the trading style. I'm going to kind of make no assumptions about your knowledge level with trading. So trading styles, there are investors and there are traders. So investors traditionally invest for the long term. Traders are kind of in and out more frequently. So as a trader, you might be, a day trader, a swing trader, a position trader. So a day trader's in and out of trades in a single day. Swing traders in and out of trades, in several days. A position trader's in and out of trades, in maybe even months. And then going down, you could have an intraday trader, which is also in and out of trades in a single day. You could have a scalper, or you could have a micro scalper. So that's kind of how I qualify the different trading styles within my program. Those definitions could be interpreted differently depending upon your financial instrument, but you get the gist. Are you a day trader? Are you a position trader? How long are you holding your trades? So that's the first thing. And this should be these should be easy questions for you to answer if you're already trading. Number 2, what's your trade entry window? So this goes down to your daily habits with trading. In my program and with my clients, I talk a lot about treating Forex like just a hobby, because that's one of the things that I see a lot of traders mistakenly do is they'll say, yeah, I want to learn how to trade. I want to make money, right, on the side, or eventually replace my income as a full-time trader. But yet they're not putting forth the effort and actually doing the behaviors necessary to treat this seriously. So what I mean by trade entry window is again, based on the trade strategy or the trade plan you're using, when do you trade? Do you get up at 8 a.m. and trade? Are you trading at night? Are you looking for trades once a day? Are you looking for trades twice a day? Are you only looking at trades at the beginning of the week or the end of the week? I mean, there's so many possibilities here, and there's no right or wrong answer. And again, it could depend on the instrument you're trading. You know, like the stock market isn't open 24 hours a day, but the Forex market is. So, you know, there's all these different things. You know, if you're still working, you know, are you looking for trade setups before you go to work? Do you have to get up an hour earlier to do that? Are you looking at them on your lunch break? Are you analyzing the market on the weekends? Like, what does your trade window look, and when are you committing to trade? So you should know that. Like, it shouldn't just be like, oh, today I wake up and, oh gosh, I hit snooze too many times, so like, oh, I'll just look at my charts like when I get home from work. It should be like, no, my alarm is set an hour earlier. I'm not hitting snooze. I'm getting up. I'm analyzing my trades. And before I even start my day, I've already analyzed the market. Or maybe it's like, hey, my trades actually don't set up until the end of the day, and I have to use information from like the current day to analyze, you know, my charts or whatever. So maybe yours is, hey, every day when I get home from work, the first thing I do is trade, and I need to make sure I do that between 5:30 and 6:30 p.m. So this trade entry window is intended to be very, very specific for a time. So like, just like at your job or anything that's important to you, like maybe your child's sporting event, like there is a start and end time, and there's a reason for that. It's so you can be on time, and so you commit to showing up and you block your calendar. It should be no different with trading, is kind of what I'm getting at here. If you say you're going to trade and you're going to day trade, and that means you need to look for trades every day, what time do you need to look at trades? What time does your schedule allow you to look for trades? And are you committing to that and like holding yourself accountable to it? So that's really, really important. And that's, you know, like I said earlier, a big miss that I see with beginner traders is they say they're good, but their behaviors and their daily schedule reflect the commitment that they think they have. Number 3, window exclusions. So not only do you need to know with your trade plan, when should you be looking for trades and when should you be trading and entering new positions, but also when should you not be trading? Like, are there times based on your analysis and qualifications that are like no trade windows? So like for me, I'm a technical trader, I'm a day trader, I'm in and out in trades in a single day. So I'm looking for relatively small moves in the Forex market. And I don't want to be in trades when there's, you know, extreme volatility. So I have a rule that I don't enter trades 2 hours before a red flag news event for a given currency. And that's inherent in my trade plan. So even though I might be looking for trade setups at 8 a.m., if there's an upcoming red flag news event for the US dollar, then I'm not even going to look for trades on the US dollar. Like, those are excluded because it's part of my plan that I know my specific trade plan does not perform well in time periods leading up to and shortly after super high volatility for that currency. And I know that red flag news events create that extreme volatility, and I don't want to be a part of the market during that time, because I want to be in the market when it's predictable, and when it's not predictable 100% obviously, but more predictable, and prices reacting to support and resistance the way I like it to. I'm a price action. So I'm analyzing candle action and support and resistance and price action, or swing highs and swing lows, to identify my entries and exits. So I don't want to be in the market when it's so this kind of all goes back to, again, knowing your trading approach. So maybe you have window exclusions or maybe you don't, but it should be a question you're asking yourself. Are there any days or times of days, or even times of year, you know, if you're more of a position trader, are there times of the year that you won't trade? Or maybe, you know, if you're a stock trader, maybe you don't trade so many days or weeks leading up to you know, quarterly, I'm totally having a brain fart here, a quarterly release, right? So again, just know your trading approach and the typical time to trade it, and also know when you should stand aside. And this also could be like, leading up to holidays or bank holidays. I mean, do you trade bank holidays when banks are closed, when foreign banks are closed? Like, what impacts when you trade? Hopefully I've drilled that home. So pairs or financial instruments. This is kind of in, but it can be a good, may not be super obvious for you right now. So what, if you're a currency trader trading the Forex market, what pairs do you even look at? Is it just one or two? Do you have a list of them? Just pairs that have a spread less than 2 or 3 pips? Other financial instruments, are there certain stocks you trade, or does it have to be a certain price or under a certain price, or does it have to have a certain change value over the last 90 days of a certain amount? Like, how are you determining and narrowing down the financial instruments that you trade and that you want to analyze? And this holds true really for any type of analysis, whether it's technical, sentimental, fundamental, and have your pairs or financial instruments narrowed down before you even go to your computer to start analyzing. And then number 5, the risk mitigation parameters. So I'm really huge on not only knowing your trade plan, but a big component of your trade plan, which could even be a standalone outside of the trade plan, is risk mitigation, right? So I'm a big advocate of protecting your hard-earned money first and growing it second. So what I mean by that is you need to have risk parameters pre-identified again before you, so that you're not over leveraging yourself on a given instrument on a given day. So for me, I have specific risk percents, like maxes, that I will put on a trade. A certain percentage of my account is allowed per trade, is allowed per currency. So in the Forex market, I could be trading the US dollar, Canadian dollar, and I could be trading the euro US dollar. Both of those pairs have the US dollar in it. So they're very correlated in their movements, whether it's inversely or in parallel. And because of that, I not only have a risk percent max per trade, but I also have identified a risk percent max per currency. So, if you think about the instruments that you're trading, are there certain instruments that often move in parallel? And you may want to mitigate your risk by putting a max on that. So for example, if my max risk per trade was 1%, then maybe my max risk per currency would be 2% of my account, which means that I'm not in more than 2 trades that have the same currency in it. And then the third risk mitigation parameter I have for myself and that I recommend for you is having a max risk per day, per week, per month, whatever is more applicable to your trading style. So for me as a day trader, I have a max risk per day. So I could be, my max risk is 3% per day. Like I'm never risking more than 3% of my money per day. And obviously people might have a different percent than me, but the point is you just need to know what your max is so you're not overextending yourself in a single day. Risk mitigation is so important. So those are the 5 logistics components that really help you just kind of build the framework for your trade plan. Now we're going to go into qualifications. So what I mean by qualifications is what is a checklist that tells you when you have a high probability trade setup. So for me, there's 6 detailed factors that I'm looking for when I'm at my charts looking for trades. And those 6 very detailed factors, I have to have all of them present to put a trade in. So it's really making me take a very objective approach, a systematic approach to finding trades where not only do I have to know what constitutes a high probability trade setup, or said another way, I need to know what gives me an edge. What qualities, indicators, overlapping factors give me an edge in the market. Again, and whether you've created this, purchased it from someone else, like you need to know the very mandatory things that you're looking for that have to be present. So for me, I have 6 detailed items, but they roll in to 3. So first, I'm looking for a certain reversal candle sequence on the 4-hour chart. So again, look at how specific that is. Not only what I'm looking for, but also what time frame am I looking for it on. The second thing that I look for is to be in alignment with support and resistance on both the 4-hour and the daily chart. So I've now introduced a second time frame into my qualification. So I'm looking at the 4-hour chart, I'm looking at the daily chart, and they need to both be at support or resistance, and they need to be aligned. If one is at support and one is at resistance, then I'm not taking the trade. I want this confluence of factors that gives me an edge in the market. The third thing I look for is price action on my entry time frame to confirm time frames. So my entry time frame as a day trader is the 15-minute chart. So what I'm looking for is a series of swing highs and swing lows that align directionally with the support and resistance direction that I'm at on the 4-hour and the daily. So those are the 3 very high-level things I'm looking for. Within each of those, I have very specific definitions for what I need to see, what needs to be present, how candles are formed, etc. But that just gives you a detail. Like again, when I sit down at my charts every day, I know that I go to the top of my currency pair list, which is already predefined from my logistics. I start at the 4-hour chart because that's the first time frame I care about. And I know that I'm looking for things on the 4-hour, the daily, and the 15-minute. And when all of my qualification know that I basically have permission to put a pending order. Or, not everyone uses pending or limit entries, but with my approach, it is. So take a moment to make sure that when you're writing your trade plan, you know exactly, very objectively, what you're looking to find. If you get to a point where you're like, ooh, it's this or this or this or this, or sometimes I do it this way and other times I do it this way, then that means you really haven't refined your qualification checklist. And you need to spend a little bit more time back testing or going back through your results or, talking to your coach or whatever that situation might be for you. But it's really important that you know exactly what you're looking for when you are looking for trades. I see a little question here, maybe. Yeah, exactly, Chris. It can't just be, it looks like this. It needs to be like, hey, I know exactly what it is. Thanks for that. So the third component is trade management. And what I mean by this is, let me get my cursor back on. There we go. The entry. So, okay, in our previous one, we identified how to qualify those high probability trade setups. Now you need to know, okay, I have a qualified trade setup. What do I do next? So the first thing you need to know is, where are you going to enter? So specifically, a couple things. Are you clicking in manually? Are you doing like just market price? Are you doing pending orders? Do you have the option to do both? It depends on your trade approach, right? And your trade plan. Like for me, my trade setups set up in advance. Like I can qualify them in advance and then I wait for a pullback for my entry. So all of my entries are pending orders or limit entries. Yours might be fine, but again, are they market or limit entry? Can you do both? Or if you miss the entry, do you allow yourself to click in, right? Like specify these rules for how you define your entry and how you allow yourself to enter the market. Next, your exits. So I'm a big proponent of always using a stop loss and take profit. So if you don't know what that is, basically the take profit is the price at which I want to get out of the market when the trade moves in my favor. The stop loss is basically where I want to get out of my trade if the trade goes against me. So where I want to get out in a loss. So you should be able to identify that before you even enter the trade. And then I always recommend using them from the start. You should never, my personal recommendation, take it for what it is always use a stop loss and take profit and then never move them. I'll get into trade management in a moment, but never move your stop loss further. I see a lot of newer traders doing that. And it's like, why did you even use a stop loss to begin with? So stick to, again, your trade plan. If you have predefined an exit and an entry that over time has given you profitable results, why would you do something different in the moment? And again, as traders, you're sitting here trading every single day. If you're entering and exit the market differently with each trade, how are you ever going to know if your trade plan works? Because you're basically executing a different trade plan every day. So again, consistent execution will yield consistent results. Trade management. So, okay, you've set your order, so you know exactly where you're going to enter, you know exactly where you're going to exit, both in profit and loss. What's next? So there's basically two options. Assuming you use a stop loss and a take profit that's predefined and put into your orders, you can either set and forget the trade, meaning it'll like do its thing forever and ever until it hits a stop loss or a take profit, or you might have some trade management rules. So I'm a set and forget trader because it aligns with my trade approach, but I do have a couple of trade management rules. So some things to consider with trade management. Again, how do you very objectively define the way you're going to manage each trade so that you can do it the same way with each trade? What I mean, you could use a trailing stop loss, for example. You might say, if the trade moves 10 pips or 10 basis points, I'll tighten my stop loss by X pips or bips, right? You might say, I'm a price action trader. I alluded to that earlier. So my trade management recommendations or options that I give to traders in my program are all based around price action. So have you hit an opposing level or an upcoming support or resistance on your entry time frame? That's a very logical place to tighten your stop loss. Have you gotten to a 1-to-1 where you might want to move your stop loss break even so that a winning trade doesn't turn into a losing trade? Like, there's all these different logical ways from a price action, or even if you're someone who uses indicators, there are very definitive ways you can manage your trades, and you can do it consistently with each one. So make sure you have that identified. Manual close. So when do you manually close the trade, if ever? For me as a day trader, I never carry trades overnight during the market rollover. I mean, Forex is a 24-hour market, but the daily rollover happens at 5 p.m. Eastern. And when that happens, I know the spreads widen a lot. And because I'm looking for small moves in the market, I don't want to be in a trade when the spreads widen, because I'm just asking to get stopped out. So I know my trading approach and my trading plan so well that I don't care where the trade's at, if it's in profit or loss. If it's still live and it's an hour before the daily rollover, I'm closing the trade. I don't care where it is. If it's been sitting all day and hasn't hit either my stop loss or take profit, it's just been ranging, then the odds are no longer in my favor. Because again, I'm trading off support and resistance, and I want reactions off that support and resistance. So if it's just done nothing, kind of flatlined all day, it's basically not going to do anything for me. And I don't want to be in the market when the spreads widen. So think about your trade plan. Think about when are times that it makes sense for you to manually close the trade, no matter where it's at. Another one for me is approaching red flag news. I, again, don't want to be in trades during red flag news. I give myself a big window before those red flag news events that I don't even enter new trades. But if by chance I'm in a trade and it still hasn't hit my take profit or stop loss within 2 hours of a red flag news event, I definitely look at liquidating it. Obviously trying to hopefully do that in the profit, but sometimes you have to liquidate it when it's in the loss too, because your loss could be so much bigger if you left it open during that high volatility time period, where again, the spreads widen, liquidity is much lower, and you're more likely to get stopped out. And you're also more likely to get stopped out with a super big spread. So again, as you think about the way you trade, the way you're managing your money, the way you're managing your trades, think about it as how can I protect my money? Money, which definitely is like the end game. To make money, you have to protect your money, and you have to have plans in place so that you can really mitigate your risk. Like the disclaimer said, there is risk involved with trading, so we just can't ignore that. visuals. So, you know, specifically for technical traders, and also for sentimental and fundamental, I mean, most of us are using charts or charts of some kind, and you need to know not only what are your rules in like a written down way, but you need to be able to draw out what you're looking for, right? So like for me, like I had mentioned as an example, I use candle action. I'm looking for very specific 1 of 5 candle sequences. And I have those drawn out on my trade plan. You can draw them out on a sheet of paper, you know, whatever it is you're looking for, whether, again, you use indicators or price action or moving averages, you know, whatever you're using, you should know what a qualified trade setup looks like with a picture. And you should be able to not only visualize it once it's set up and finished, but visualize it as it's setting up. So, you know, obviously when you're looking for trade sets, it's not always qualified yet when you're analyzing your charts. Sometimes you have to continue to monitor it to wait for the trade to fully set up and qualify. So you need to be able to kind of predict those swings or candle series that you're looking for. You know, for me, candle action, then I go to support and resistance. So I need to know how to identify support and resistance on the charts. And I need to know how to zero in on a specific price point within that support and resistance. And I need to know what that looks like. Where do I hone in at on those candlesticks? And then even with price action and looking at swing highs and swing lows, which is part of how I identify my entries and exits. You know, I need to know what chart am I looking at? What does this series of swings look like? Do I need a higher high? Do I need a lower? Need a higher high with a higher close? Like, what specifically am I looking for? Okay, so I went through a ton of information just then. You guys are obviously going to get this recording, so feel free to go through it and get those nuggets again if you didn't take notes. But overall, the perfect recipe for that winning trade plan is knowing your logistics, knowing how you're going to qualify your trades, understanding before you even get into a trade how you're going to manage that trade, where you're going to enter, where you're going to exit. Are you going to set and forget, or are you going to manage it? When would you manually close it? What things are happening that are going to change how you manage the trade. And then the visuals. What are you looking for? How do you make sure that you know what it looks like? And the fact that you can draw them out, whether it's like on a sheet of paper with a pencil or in like a visual design program on your computer, like the fact that you can them out actually solidifies your understanding of what you're looking for. So it's really, really important to be able to do that. So after all of this, most of you said you didn't have a trade plan when I started. So now, do you think having a written down trade plan, laying out these details would help you as a trader? I'd love to hear your comments. Yes or no? Do you think having a written down trade plan, laying out these details would help you as a trader? Yes, yes, yes. Awesome. I was hoping that would be the point I'd get to you guys, and I'm glad it came through. So it's super simple. It doesn't take a lot of time, but it is worth the time because ultimately, consistent execution will yield consistent results. Obviously, having a proven trade plan that works over time is a component of that, but understanding your trade plan is just as important. So the free bonus I told you guys about, I have a Forex video series where I send out daily videos. It's called 30 Days of Trading Tips and Tidbits. It's completely free, lots of information. I do go into some specifics about Forex, but again, a lot of the principles are applicable to any trading approach and trading any type of instrument. So if you go to this website, all you have to do is put in your name and email address, and then you'll instantly get the first video in the 30-day video series. Share this information with you, and obviously we could stay connected via email from that point forward. So if you're interested in the free bonus, definitely head to this website. You can unsubscribe anytime, so there's no commitment on your part. But check that out. And then also, I alluded to it earlier, but I am going to give you also a special offer for sticking through this presentation. So I coach Forex traders, again, beginners and experienced. My core program is called CFXP Online, or Consistent FX Profits Online. I have 3 tiers to that program, a level 1, level 2, and level 3. And I'm going to be giving you a special offer on my level 2 program. Basically what I teach is how you can win 70% of your Forex trades starting today. And that's, again, no matter how much experience you have. So it includes the Trader's Edge online Forex trading course. So I'm going to go into just kind of what's included real quickly before we jump off the line. So there's 8 modules in my online course. It's on demand. You can watch it anytime. Some people get through this course in a weekend when they really dedicate some time to it. Others, it might take a couple weeks. But the goal of this course is that you're up and running with my trading approach actually by the end of module 4. So module 1 is restoring your mind. Module 2 is strengthening your knowledge with Forex. I make no assumptions about what you know or don't know. So I basically teach you everything you need to know specific to my Forex trading strategy and trade plan. Then we build your trade plan. You walk away with that 1-page trade plan that I talked about, specific to your availability and all that good stuff and how you're going to manage it. Then I give you some additional resources and training on how to implement it and actually start trading it today. And then the second half of the course is all about optimizing your execution, enhancing your skills, giving you some advanced strategies specific to my trading approach, multiplying your results. So I go into a lot of details about how you can grow and scale using my trading approach. So I trade my approach at the express day trading level or intraday trading. But because it's technical in nature, you can scale up or down. So if you wanted to do day trading, position trading, swing trading, you could. Or again, if you want more trades and more activity, you can definitely scalp or micro scalp it as well. So it's very versatile depending upon what kind of trader you are. And then I give you some additional information to help you in the long run. So this course is valued alone at $1,997. Here's a couple of, you're not going to pay that, obviously. Here's a few testimonials about my training. These are, again, actual testimonials. Love the modules and being able to move at my own pace. Videos are short, well-paced, and well-presented. Workbooks are great too. So workbook for you to take notes. Also, I give you practice exercises as you're learning so that you can check your comprehension. I'm just going to use this and nothing else. This is it. No more buying Forex courses, watching YouTube videos. Thank you for saving me so much time and money. So I really take a lot of pride in giving traders literally everything they need in my program. I wish I would have found this program 2 months ago. So, hey, me too. So lots of value there. You're also going to get my Consistent FX Toolkit in the Level 2 program. This is a value of $497. Basically, I give you some proven tools that drastically reduce your risk. So I give you the trade plan template, that 1-page document, give you a trade journal and a metrics tracker where I teach you what metrics to hone in on as you're monitoring your progress and your performance. I give you a growth and scaling calculator so you can see how your hard work is going to pay off in the long run. And then I give you some daily, weekly, and monthly routine prosperity. So, again, that goes back to that. This isn't just a hobby. This is like, I'm going to treat it seriously, and I'm going to give you some really good habits and routines to be able to do that. Oh, and the personal protection plan. So again, that goes back to really mitigating your risk and making sure you don't lose your money. Here's a few testimonials about the toolkit. Love the trading plan spreadsheet, 1 page with everything on it. I love that you keep it objective and logical, not ambiguous in any way or subjective. I've taken 4 trades so far according to your method, and they all hit their target. Again, 100% is not what I achieve. I'm closer to above 70%, but obviously you can get runs of many profitable trades in a row. I appreciate the step-by-step process with very understandable rules. I now see how you have a 70% plus success rate with your trades. And a third thing you're going to get is a year of weekly group coaching calls and support. So it's a total value of almost $5,000 because they're weekly calls for a year. So in these calls, I'm basically, they're live, they're video calls every week, they're 60 minutes. You're going to get group coaching, and there's the opportunity to ask questions on every single call so that I can do those visual explanations and responses for you. I go through actual trades I've taken and other traders have taken in great detail. I do a live chart analysis where we're looking for actual trade setups together. And here's a few testimonials about my group coaching. Very productive class today. Love the live chart scan. Awesome review of your trade setups. I hope to have some to contribute soon. So that was obviously a newer trader. I like exactly how you're stepping through the charts. It is excellent so we can see your thought process. So yeah, I do the analysis where I'm giving you commentary as I'm going along and looking for trade setups. So it really supports what I teach you in the online course. These sessions are very helpful. We'll be back next week. So it's not like a one and done. It's like you really will want to participate for the 12 months. And these calls are recorded. So if you don't make it, you know, you can watch them later. Excellent. I like the bonus topics you cover in the group calls. So I do try to give you a little bonus each week and help you advance your skills. So CFXP online, components 1, 2, and 3. If you had a calculator out and we're adding up the value, it's $74.91. You're not going to pay that, like I said, but I am going to also throw in another bonus, and that's 1 year access community of traders. So, I mean, this value, sure, I could put a price tag on it, but honestly, it's free because what it means is you have a community of traders from around the globe, and you are learning, growing, and profiting together. So you can connect with each other. This is really where I think the pricelessness comes in, is you get direct access to me in that group. So not only do you have the weekly group coaching, anytime you have questions in between the group coaching calls, you can message me in the Facebook group and I'll respond. So, I mean, gosh, that's priceless to have direct access to your trading coach. And then learn from others. So other people are asking questions. You have access to see their questions and the way I respond. So it's just this real evergreen learning environment. So all of these things, well over $7,500. You're not going to pay that. My level 2 pro trader program is normally $14.95 if you pay in full, or 6 payments of $295. Today's price, I'm going to save you $400. So you can either do 1 payment of $10.95 or 6 payments of $225. So this offer is going to be good to the first 10 traders, and it also will expire no matter what on Monday, this upcoming Monday, February, is that the 2nd or the 3rd? Let me just pull up my calendar. I should have known that. 3rd. So Monday the 3rd at 9 p.m. Central Time, this offer expires. How do you get the link to this special offer? You register for my video series and you will also get emailed the special link. So whether you want one or both of these, use the same link to register. Again, you can unsubscribe anytime after the video series, during the video series, after you get the special offer. Like this offer's for you, and you'll get the day, you know, almost immediately after you register, you'll get both of these pieces of information. So I know I covered a lot. Is there any questions that you guys have for me? We've got, I don't know, 5 minutes. Was this valuable? I'm going to open the chat box here. Good way to make a checklist, put link in here. Oh yeah, there we go. Thanks, David. So there's the link. You can click it. It's live today. You'll first get the first video in the series, and then about a minute later, you'll get the free offer, or not free offer, but the discounted offer, which is unique to this call. So, hey, thanks. I'm glad it was helpful. I'll give it another minute, see if there's any other questions. Thanks, Chris. Appreciate it. Let's see. Valuable presentation. Thank you. Hey, I really appreciate that. Glad I could be here. I also have a Facebook page and a Facebook group that's free. So if you're on Facebook and me out, my business page is Valerie Fox, and my free group on Facebook is Consistent FX Profits. You can see my business name down here. If you just search that in Facebook, you'll find my free group that you can join. So again, whether you're new to Forex or you're trading other instruments, definitely a lot to learn, and I try to provide a lot of value and over deliver. And if you're interested in learning Forex or interested in learning my specific trading approach, definitely take advantage of that special offer that I gave you or the free bonus video series. So thank you guys so much. I really appreciated the live interaction. David and Anka, thank you for inviting me on the call, and I'll turn it back over to you guys.